Good morning and welcome to the Pantera Lithium Investor webinar. I'm Chloe Hayes, Investor and Media Relations Manager, and today I'm joined by CEO and Executive Chairman Barnaby Egerton-Warburton. Today we'll be providing an update on the company following the recent investor presentation that was lodged on the ASX last week, followed by a Q&A session. And to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Barnaby, I'll hand over to you.
Thank you, Chloe. Thank you, everyone, for tuning in today. We are Pantera Lithium, and I'm going to kind of rip through this deck. Everybody sees a lot of decks, so I'll talk to it a little bit, and then we can get into some serious Q&A. So who is Pantera Lithium? We are a smackover lithium brine focused player in Southwest Arkansas. We are one of 5 to 6 companies in the play. We are the smallest listed company in the play, with one of the largest acreage positions. The slide you're looking at right now, it's just detailing my board and management team. Myself, Exec Chairman, Tim Goldsmith, who you should all know very well, is a non-exec director. Matt Hansen, Nick Payne, Head of Exploration, and then 2 of our most valuable team members, Cleve Thomas, who's our VP of Land, and then John Bishop, our Stakeholder Engagement and On-Ground Liaison Manager in Arkansas. All the numbers of shares on issue right there on the left, you can all look them up at a later date. Okay, so just a quick chat on why we're in this play. We're in this play because we're long-term believers in the lithium industry, the lithium market, and certainly the lithium brine and direct lithium extraction technology. And how does this relate through to a macro theme? Well, on page 4, you can download this deck. I've outlined 5 to sort of 10 points that are pertinent to this industry. We believe, and market intelligence tells us, that in 2027, demand starts to outstrip supply of lithium, and being in the brine space, certainly in North America, where a burgeoning industry is charging along, where you will produce a resource, refine a resource, ship that refined resource off to battery makers, and it will remain in the US in all likelihood. There's huge government support for this, both at federal and state level, and that is why we're in the play. I'll just move on a bit. I did mention this is a burgeoning, growing industry in the US. There are over 30 large-scale battery plants, refineries, cathode and anode maker projects underway and breaking ground right now. Some are close to being completed. There's a map, as you can see. Here's little old, I won't say little old Arkansas, but here's Arkansas. The beauty of Arkansas, its governor and its government are fantastic. Sarah Huckabee Sanders and her team are forward-thinking, innovative, and very, very supportive. The other thing about Arkansas and this play is it's been drilled for over 100 years, producing oil. There's rail, there is road, there are services, there are drilling companies, there are consultants, and there is a ready workforce willing and able to get in and help us. This is a great diagram or a great picture. A lot of companies use this. And I think if you look at the current scenario or macro scenario in the US, with the Trump administration really coming down hard and trying to develop the critical minerals industry, we are right in the center of that. Love Trump or don't love Trump, but Sarah Huckabee Sanders is loved by Trump, and her state is loved by Trump and their regime. So we're very fortunate to be there. Okay, moving along. And this slide is it's a little bit out of left field, and I like to talk about this. Why are big oil getting into the lithium brine and lithium industry? Well, if you just cut through this, basically in 2035, the International Energy Agency estimates that oil demand will be down by 10%. So 10% doesn't seem a lot, but when you look at it on the bottom line of big companies, it's a lot. So if you look at, say, Exxon, maybe it's in 2035, it's 30 odd billion off their bottom line. And we talk about Exxon and big oil. Let's move along. You can see on this map the players in the smackover. Tetra, relatively large company. Standard, growing in stature with their deal with Equinor. Equinor, a behemoth, an $80 billion company. Albemarle, the world's largest lithium producer. And then you have Exxon, who is an absolute behemoth. And then you have us. So we are the smallest company in the play with the largest net acreage position. So as I always say to people, well, go buy Albemarle, go buy Standard, go buy Exxon or Equinor, but are you going to get a 10, 15, 20 times uplift on those stocks through exposure to this sector? And that's, I would say, probably unlikely. But then you look at Pantera and where we are priced and undervalued massively, that is where you're going to get your massive returns at that inflection point when demand starts to outstrip supply. This is a closer zoom in on our acreage position. Now, when we first started this acreage play, we knew what was going on in the play. We secured 50,000 exclusive abstract acres. And what that means is in Lafayette County, we went to the only person that provides that data on who owns the minerals and who owns the lithium. And we paid an option fee. We locked up 50,000 acres. So we've been able to lease as we like at a really good rate, dealing with great people. And we've seen very little to no competition in our area of that 50,000 acres. I will point out, however, that this map is not an exact representation of where we are. I'm not producing a map that shows exactly where we are and what we're doing, because then that gives an advantage to Exxon or whoever is leasing around us. Now, that competitive leasing area, you can assume that there are relatively large companies or huge companies. Some of these companies moving west, and at some stage I'll provide an updated map on who's doing what. Now, that data, just so you know, you can go and get it. It's publicly available. But at this point in time, I don't want to be the one that puts it out there. But you can go and find it if you look hard enough and see just who is in this green hashed area. Now, you can also see on this map our approximate planned wells for 2025. We're looking at 3 wells. 3 wells will give us a JORC resource. We'll feed the data from those 3 wells back into the Schlumberger SLB model. That gives us a fantastic picture of what we've got, the thickness of our reservoir, the grade of our reservoir, all in one model, and our size of our resource. Post drilling these 3 wells, we can move quickly to PFS, and then basically post PFS, which is obviously a written document or written study, we then move into a pilot plant. Pilot plant is basically giving you all the data with your with what you can produce, the grade, a closed loop system, and then you're ready to go. So we think that if we can drill these wells this year, we will be in 12 months' time in a position to make a final decision to develop this project. So this, I've kind of talked a bit about what we are and who we are and where we are. This slide is a pretty good summary of all of that. In terms of where we are right here, right now, today, I have received on email this morning the subsurface work for the next 3 wells, which we've been working on, which is pretty exciting. We'll be talking about that in the coming weeks. You can look at us and you go, okay, well, tiny company, 10 million market cap, why are they so small? Well, the lithium market in Australia, as everyone knows, if you're a lithium bull, you're kind of hanging your head, your tail's between your legs, and you're not feeling particularly good right now. But if you run the numbers and look at this exploration target we have, and let's say we end up with, 2 million tons only. Well, you do the sums, 2 million tons times $10,000 a ton, and it's only costing you $3,000 a ton to produce. Now, they're big numbers for such a small company. We don't look at this project and the Smackover like, say, an Exxon or an Equinor Standard Lithium, where their capex to go and build their projects, $1 billion plus, 1.2, 1.5 billion. We look at it in a more modular sense. We go out, we clear a 5-acre pad, we drill 5 to 6 production wells, 4 to 5 disposal wells, and we bring in a modular system that will produce 3,000, 4,000 tons per annum. You start with that, and then you move on to your next pad. By moving on to your next pad, you use either the same DLE tech or refined direct lithium extraction technology, and the capex for those projects is all sub 100 million. It's still a big number, but the speed in which we can do that is way faster than any of the big guys and their levels of management and administration and panels and committees. Okay, so I've kind of talked a little bit about the Smackover before. 100 years of data. That's what it looks like. This spot down here in Southwest Arkansas is the sweet spot, and we are right in that zone. So, Hugh McDonald, a fantastic guy. You see that comment on the right there. He is one of the exceptional people within the Sarah Huckabee administration. A huge believer in this industry, as Exxon, as Equinor, and you have to consider the caliber of the people that are backing this play. Exxon is not going to go into this play and spend the hundreds of millions of dollars that they've spent or are spending, knowing that it's going to be a failure, knowing that it's not going to be a success. So, it's I don't have to tell you. All you have to do is just think about who's in the play, and then how sexy that actually makes it. Okay, so I've talked about the subsurface work, and that's all done. This is a rehash page, so I'm not going to talk about it and go over it too much. I will say that our 3D static model that we received from SLB, who are one of the most respected groups in the Smackover, they've done a basin-wide model, is amazing, and it's given us a huge advantage. So to go and drill out here with that information de-risks us massively. Thank you very much to SLB. Direct lithium extraction, I think everybody's kind of getting their heads around it. It's very different to a typical mine, as you would all know, but it basically is, as you can see from this slide, you are drilling wells just like an oil and gas well, exactly the same technology, exactly the same process. You finish drilling your well into the upper Smackover, you then lower down a submersible electric pump. You're pumping large volumes of water. Now, the beauty of the Smackover and lithium brine is that compared to, say, an oil and gas play, is that at 3 a.m. in the morning, if you're drilling an oil and gas play, you're going to wake up in a cold sweat, in a panic, going, is it there? Oh my God, are we wasting money? Typical oil and gas sort of operators, daily life and fear. With this, we're drilling into a huge ocean. The water's there, the grade is there, the brine is there. So it's quite a nice position to be in. The DLE technology, we're spoiled for choice on that front. There are a few leaders that we've been talking to. Coke is one. They are the leader. It's certainly in the Smackover. They have been producing from a commercial scale column with Standard Lithium for over a year. Standard Lithium and Equinor, the joint venture partners, have just made their final decision to go ahead with the Coke technology. And that project is now fully funded with a huge amount of government subsidies. And we are, as you say, a stone's throw away from their project. Happy to take questions later on DLE, but I'll presume that, or assume that everybody has a fair idea. So next steps for us, you can see on this slide, we've just finishing the finalization of the 3 wells location, continued acquisition of additional acreage. Now, one of the things that's really interesting in what we're doing while we're waiting on data from and location and subsurface data, we have been looking at other regions in North America. and have started progressing in different states, a couple of different states, discussions and approaching other operators in the oil and gas sector, where there are high lithium content and nobody's up there running around. I'm not going to say where that is. I'm not going to give our competitive advantage away on that front. So Q3, Q4, we're looking to start drilling, testing and publication of our grades and our results. We do want to try and get a pilot plant out there this year. There are a few pilot plants around. We know the 3-4 technologies that we like. We're in constant communication with various groups. So, for us, it's not a laborious, elongated process. We've done all the work. We know the costs. We know the process. So we will be fast. And it's very easy to, these pilot plants can be mobilized and operate remotely. We don't need staff on site. Maybe you'll have someone go and check the pilot plant once a week in a closed loop situation. And the data is very valuable. So we look to get that done this year. And then, I'd like to say we'd be able to get a JORC resource out this year, but I expect it will be early next year. However, with the first well, we will start to know pretty quickly what we're looking like in terms of a JORC resource or a resource based on the grade and permeability, porosity, and flow rates and so forth. So, pretty exciting year for us. Okay, that's kind of it for the general presentation. I hope I haven't gone too fast. I'll stop sharing my screen. Go back to you, Chloe, for some Q&A.
Yeah, thanks, Barnaby. And just a reminder, should attendees have any questions for Barnaby today, please use the Q&A function at the bottom of your screen. So let's kick off. First up, what makes Pantera's lithium brine projects in the Smackover Formation stand out compared to competitors like ExxonMobil and Standard Lithium?
Well, I think it's more, that's a great question, Chloe. I think it's more not necessarily that our project stands out. All these companies, Exxon's project is an exceptional project. Standard Lithium and Equinor's project is it's an outstanding project. I guess what makes us stand out is how nimble we are and our ability to lease and lease at a reasonable price, not at the big premiums that are being paid to the west of us, and our ability to move quickly. We're a small company. We don't have layers and layers and layers of management and process to go through. We are a cheap operator. We make every dollar that we have work to the fullest extent. So I think that, to answer that question, yes, our project is just as good as the others in terms of its geological setting and its potential. But in terms of an overall company, we're faster, we're quicker, we're cheaper. We'll do everything. And based on having the capital to do it, we'll be up and running certainly before those two companies.
Great. And next one. So what is Pantera's long-term strategy for expanding its footprints in the US lithium markets?
Also a good question, Chloe, or whoever has asked that question. So I kind of touched on this when I was running through the deck. We're not sitting still. We understand this inflection point on the macro side when demand outstrips supply. When that happens, a huge amount of capital and interest comes into the market. It normally happens 12 months before. So if you're an investor, you want to be looking in late this year into early next year. So we are not sitting on our hands just focusing on the Smackover. As I said, we are actively in discussions in other regions. We've done a lot of research into areas brine areas that are high grade, and we're quietly working behind the scenes to see what we can do there. So in terms of long term, we would like 2 projects, maybe 3, and we do that by being nimble and smart and expanding our footprint while others are contracting.
Okay, and so this question is about the project development. So can you tell us a bit about the Pantera leadership team and their expertise?
Yeah, okay. So you would have seen on, I think it was slide 3, I kind of rushed through our team. I'm going to go bottom up instead of top down. So, we start any successful operation in North America requires people on the ground, and those people on the ground have to be good people, honest people, hard workers. And I think that we've got two of the best in Cleve Thomas and John Bishop. Cleve is basically was born in the oil patch in Oklahoma and Texas. He's an oil man through and through. I think that you should, if you haven't met Cleve or talked to him before, you should watch his interview with Jane from a few weeks back. Cleve is the kind of guy that, we show up somewhere to someone's house or ranch and we're trying to lease, and that, and this is a generalization, but they basically come out, shotgun on the shoulder, spitting acid. They don't want to talk to you. Within sort of 15 minutes, Cleve has us all sitting down having tea and scones, and we're best friends. So his expertise with leasing land, operating, drilling, and water production is it's second to none. And then you've got another valuable resource, John Bishop. John Bishop is a fourth, fifth generation Lafayette, Arkansas gentleman, ex-state trooper, ex-state police. He's kind of like the Clint Eastwood of Lafayette County. He knows everybody. He's very tapped in. He's highly respected. So that's where you start, from the bottom down, heading up, and certainly not in terms of importance. And then you get into our board. Tim Goldsmith, as everyone should have seen him on the video presentations or the webinars before, ex-Rincon, sold Rincon to Rio. Tim's got a fantastic understanding of the macro situation within the lithium markets, how the big companies think, how long it takes the big companies to make decisions, the games they play. So he's an invaluable resource to us. Matt Hansen, one of our directors, great lawyer, sits here in Western Australia with us. And then, our head of exploration, Nick Payne, also fantastic, very qualified. And we have a realm of, not a realm, but a list of consultants as well that we have in the US who are fantastic.
Okay, so bear with me. There's quite a few questions coming through. Question here on your geomodeling. What insights has the 3D geological modeling provided you?
Okay, so it is actually a really good question, and I know this webinar is going quite quickly, and I'm talking quite quickly, but I'll slow it down for this. So basically, when you look at our acreage position, we have to understand where we're going to drill, how we're going to drill, how we're going to stay away from faults and areas we don't want to be in. This model has given us the confidence that the locations we drill in are the right locations. They're the thickest locations with the highest permeability and porosity. That model can always be added to. So as we get to the point we are now, where we've done further subsurface work, we input that subsurface work into that 3D model, and it expands our horizon and our understanding of our acreage position. So we know that when we go and drill, we have a huge amount of confidence that we're in the highest grade lithium area with lowest risk of faults and highest probability of lithium grade and permeability. So it's been a fantastic process to go through. And it means we can all sleep at night knowing that we're in the right place when we're drilling.
Okay, and there's a question here on DLE processing, which of course is direct lithium extraction. So can you tell us, how does the DLE process improve project economics compared to conventional lithium extraction methods?
Okay, so the hard rock spodumene guys out there are going to hate the answer to this and probably refute it, but we know that this is true. So DLE through brine, or lithium extraction through brine, is around 30% cheaper than a spodumene operation. The other benefit, or the simplicity of what we're doing, is that you're right on site. You are controlling your costs from from a brine, which is really largely worth nothing, all the way through to, let's say you want to sell a chloride, a high-graded chloride, or go all the way through to a battery-grade lithium. If you're 30% cheaper than the hard rock side of the industry, that's obviously creating pressure on those projects. But if you look at the macro scale, what does DLE add? DLE is just going to add more volume at a cheaper price. But what does that do to the market? Well, it's not going to do a lot in terms of dysfunction to the market, because if you look at Benchmark are basically saying we need another 300 mines or operations to meet demand by 2035. So while DLE is cheaper, I think that there's always a place for the hard rock side. I just think that DLE is faster, easier to manage, and certainly in North America, there will be a premium price for the output that we produce.
Okay, and so Barnaby, how does Pantera plan to de-risk the project and ensure long-term economic viability given the volatility of lithium prices?
Yeah, it's actually a good question, and it follows on from a little bit from the previous question. So, excuse me, the current price for, say, battery-grade lithium carbonate sits, if you look at the China data, it sits at about 10,000 per tonne. If your all-in cost to produce, or our all-in cost to produce, is around 3,000 a tonne, you can do the math. So let's say our resource turned out to be 3 million tonnes. 3 million tonnes times $10,000 a tonne, minus the $3,000 of production. You can do the math. You can see how big, this project is. It's in the billions and billions and billions of dollars worth. I know that sounds a lot and it sounds far-fetched for such a tiny company, but it's a fact. So, if lithium prices drop to $6,000 a tonne, we can still make money. At $5,000 a tonne, you've got a $2,000 US dollar amount of cream sitting on top. So not that I think prices will get down there, but if you consider that maybe later this year, going into next year, lithium prices start to move to 12, 13, 14, 15,000 a tonne, the economics just go straight through the roof. So I guess our long-term plan is to basically be the lowest cost producer, and that's how we can do it. And that's how we do it via DLE.
Okay, and a few questions here on regulatory hurdles. So I'll take this one from Anthony. What, if any, are the key regulatory hurdles Pantera must navigate in Arkansas and the US more broadly?
Yeah, okay, good question. And I get asked this question quite a bit. So regulatory. So you have to remember that this is an oil and gas region, and we're not doing anything different from what the oil and gas guys do as far as drilling and producing. So we would go to the Arkansas Oil and Gas Commission, permit our wells, no problem. Take you a week to get approval. They're fantastic. So, in terms of regulation there, very simple, very clearly defined laws and rules that have been in place for a long time. In terms of, if you're developing your project full all the way through and building a DLE plant, it's very simple. There are no showstoppers. You have a state government, an administration that is right behind this industry, so I don't think there really are. If anyone calls it hurdles, they're using the wrong terminology. It's just a very simple process.
Okay, and another one, sort of off the back of the question you just answered, how is the company engaging with local, state, and federal stakeholders and authorities to ensure a smooth project development?
Yeah, okay, that's also a great question. Well, I've operated, and my board have operated in a lot of different US states, and I would say that Arkansas just happens to be governed by probably the greatest and most forward-thinking governor of any state in the US, and that's Sarah Huckabee Sanders. The governor's team have been offering support to us. they've been contacting us. We've been in contact with them. They're providing introductions, and that's happened since the day we announced we're in the play. And this contact ranges from very, very senior people in the administration through to the Arkansas Economic Development Commission, all the way down to VC style funded financial support groups, it's unusual. I don't think there's any other state I would walk into in the US where we would get this kind of support and touch from a senior government official. So fantastic, great state, great infrastructure, I'm so happy that this play is in Arkansas, because in other states, you go across the border in Texas, it's a lot more difficult.
Okay, and the next one here touches on market supply and demand. With a projected lithium supply deficit by 2027, how is Pantera positioning itself to capitalize on the forecasted market recovery?
Well, it's a good question. I do talk about this a lot, and sometimes it falls on deaf ears at the moment when everybody cares about gold, and they should be starting to look further forward. So I guess it's relatively simple. The companies that make their investors the highest return are those companies that at that inflection point are either right near production or in production. So if we say we have an inflection point in 2027, and that's not me just pulling numbers and ideas and my own narrative in my brain out of the ether and going, well, it's 2027. That's me and us reading a lot of data from Benchmark, McKinsey, and all the big investment banks. So if you're at that point in 2027 that inflection happens and you're in or close to production, you are the 10, 20, 30 bagger company. You also have to consider at that point, or the current scenario in North America, and how much emphasis and capital is going into the critical minerals industry from the federal government. And a lot of people, I know I'm getting off piece a bit here, but a lot of people said, oh, when Trump comes in, he hates EVs, it's going to be terrible, blah, blah, blah. Well, you just saw him yesterday or the day before with Elon doing a bit of a pitch and a promotion of Tesla. And at that event, Elon basically said, well, because I have such confidence in this administration, I'm going to double EV production in the US from Tesla in the next 2 years. Now, go back to that map in the deck, look at all those companies that are building plants, and understand that 90% of those companies, 90% of those projects do not have a lithium supply agreement yet. So that is coming. So wind that all in and put that in your pot and stir it up. And the result is Pantera is in an amazing position coming into 2027.
Yeah, great. And this question sort of covers EVs in general, but given the rising demand for lithium EVs, which you just mentioned, and energy storage and AI-driven data centers, how do you see Pantera fitting into the broader supply chain?
But yeah, you're right, Chloe. And that, once again, it's a good question, kind of relates to the last question. Once again, go back to that map. Where do we sit as an independent, nimble, smaller producer or smaller company? People are interested in us, and it's not just lithium companies. There's industry that have been talking to us. All these companies are trying to work out how to get lithium supply. So we're right in the middle. We're absolutely right in the middle, in the hotspot, in the best play in North America, in the best country to be a lithium producer in the next 10, 15, 20 years. And all you have to do is look at the map and go, well, one of these companies or two of these companies wants Pantera's production. Could be any one of them.
Okay, great. And quite a few questions have come through on offtakes, and this one's from Barry. So do you anticipate securing any offtake agreements or partnerships with battery manufacturers or gigafactories in the near term?
Good question, Barry. So the answer to that would be I'm not going to say, to be honest with you. We are in discussions with various groups, but look at the current price of lithium at 10,000 a ton. Are we doing ourselves and our shareholders a disservice right now in signing an offtake agreement, which locks you into a lower price, even though you have triggers, collars maybe to move higher? Or do we push further down the line and back ourselves in that we know that lithium prices are heading higher and look to sign an offtake before then? Now, I'm not saying we're set in stone on that question, Barry, but we are in discussions. We're always talking to people. It's something we throw around at board level. Certainly an offtake at the time or just pre your decision to go into development would be valuable, and that's more the time frame that we would be looking at, I think.
Right. And Barnaby, I know you covered this in your last slide of the presentation, but finally, what key milestones should investors expect in 2025, and how will these impact Pantera's valuation?
Yeah, okay, so milestones. Okay, let's start with the subsurface data. So we will produce and put out some details on where we're drilling, why we're drilling, our confidence in drilling in those locations. And then you move beyond that into, obviously drilling, then into, publication of results and moving those results beyond just, numbers on a page into a JORC resource. And everything I detailed in terms of pilot plant on site and so forth. I would say that, just as if we're wrapping up now, I would say that there's a lot of interest in Pantera. We're not getting it from the Australian market, but as I said to you, Chloe, earlier, every morning this week I've been, and I don't care about this, I get up early anyway, I've been on a phone call at 4:35 a.m. With the US, and then another phone call at sort of 10 o'clock, 11 o'clock at night with the US. Various groups, and these groups range from multinational companies with minerals businesses to oil and gas businesses to funds, US-based funds. So there's a lot of interest in what we're doing. A lot of those people are medium-term, or most of those companies and groups are medium-term, long-term investors, and they understand the cycle. We are in a bit of a winter, but in a year and a half, if you look back and go, well, why didn't I buy the stock in the winter? You'll be kicking yourself. So, I think that going forward, we have some high impact, valuation accretive news flow to come.
Absolutely. And I think that's all we have time for today. Thank you, Barnaby, for your insights. And thank you all for joining us today for the Pantera Lithium Investor Webinar. Should we have missed any of your questions, please feel free to reach out using the contact information at the bottom of our ASX releases. And we look forward to hosting you again soon. Thank you.
Thanks very much. Thanks, Chloe.